Welcome back to Fast Market here on the Schwab Network. It's time to talk more earnings. We're going to focus on Target. Walmart hit all-time highs after their earnings, but Target's been definitely underperforming. Discretionary items sales have decreased sharply as grocery kind of picks up inflationary pressures. Let's bring in Caroline Wood, senior markets correspondent here. Caroline, going into this report, the bar's pretty low. It just doesn't seem like anybody's expecting anything to the upside here in Target, just due to the fact that the consumer has been finicky as far as what they're buying right now.
Yes, and even Walmart talked about the consumer being very, choosy and discerning, really focused on value. So Target share is under pressure heading into this report tomorrow, down a little less than 1% right now. I think if this earnings season so far and that better than expected retail sales report that we got recently have told us anything, it's that the consumer is slowing, but it is still resilient and still spending. So I think the big question is, we know they're spending at Walmart. Will they be spending at Target, or did they spend at Target, which, as you said, is really well known for those non-essential items, the discretionary purchases. Walmart did actually talk about an uptick. It was a slight uptick, but in general merchandise, things like lawn and garden, it was the first time they saw an uptick there in 11 quarters. First time it was positive, so we'll have to see if that translates into anything good for Target as well. In terms of the actual estimates, analysts are expecting revenue growth from Target. Revenue is expected to rise a little less than 2% to $25.23 billion. That is versus a decrease of almost 5% in the same period a year ago. It's also a sequential increase, as you can see there. And then EPS is expected to come in at $2.18 versus $1.80 in the year ago period, and versus $2.03 in the previous quarter, so a sequential increase as well. Now, back in May, Target said it expects Q2 comp sales growth to be flat to up 2%, as discretionary spending could remain pressured for some time. I had mentioned that Walmart talked about a discerning and choiceful customer. We'll have to see what Target actually has to say in terms of any commentary there. We know that they've been cutting prices to better compete with the competition, and it's not just Walmart, right? It's Amazon, it's Costco. Target has also revamped its Target Circle loyalty program to try to lure more customers to their stores and to their website. We'll also get some insights from Target Circle Week, which we know was their big sales event, and any commentary on back to school season I think will be important as well. Target did mention back in May that they saw some improvement in apparel, and they said, I was going back to the earnings call transcript, saying this gives us some optimism that we could see a better balance of spending between discretionary and frequency categories in the years ahead, but did say in the short term that they expect discretionary trends will continue to remain pressured. So I think that's sort of the expectation heading into it, likely why shares are under pressure right now and really have underperformed year to date. They're basically flat, up about 0.6% right now. So a far cry from Walmart's 40+% year to date gains.
Yeah, Caroline, there's so many different storylines when it comes to Target's earnings. Number one, with all the discount retailers, are they in that group, right? Do they make it to the cool kids table where Walmart and Amazon and Costco hang out? Do they get part of that? Then it's a margin story for Target as they get the huge mistake they made with discretionary inventories a couple years ago. Are we through that problem? Then you look at, July retail sales were a little better. Back to school was probably very popular. They've got their private label brands and their little innovations that they do. Do they have a niche in big box retail? That's the question, because the stock is discounted to where it doesn't, Caroline.
That's true, but I mean, $25 billion in revenue, I think, shows that, people are definitely spending there. I think, though, to Tom's point, the question is the bar low enough at this point with this, 0.6% year-to-date gain, and the fact that shares are under pressure this month heading into the report, down about 5%. So I was taking a look at some of the analyst commentary heading into this, because analysts are pretty split. Whereas they're very bullish on Walmart, 92% have a buy rating on Walmart, they're they're much more split on Target. 57% have a buy rating and 40% have a hold rating. So, more buys than holds, but still quite a few people on the sidelines there. And in terms of the expectation for this actual report, even though the bar might be low, I was taking a look at some commentary from Evercore saying while results are likely to be at or above street estimates, so actually could beat, comp trends appear to be moderating into the third quarter when they should be improving. So they actually think that will hurt the share price, that it could actually not have a positive reaction. So they're with an inline stance in terms of their rating. And then Oppenheimer was saying, amidst an uncertain consumer environment and a still challenged discretionary backdrop, we are taking a more conservative stance and moving to the lower end of management's EPS guidance ranges for both Q2 and the full year. So moving to the lower end, keeping an outperform rating, but it seems like there's definitely some caution heading into this report. But who knows? Maybe the bar is low enough that we could see, the shares kind of reverse course. I thought that was what was going to be happening with Lowe's, but we do see shares lower despite the fact that, they were higher earlier despite that miss on the top line and the cut to guidance.
Yeah, this stock has been almost cut in half since hit those highs in November of 2021. So, yeah, the bar is relatively low. All right, great stuff. Thanks to Caroline Woods, Senior Markets Correspondent here, breaking it down for us. But let's bring